And let's see, about a minute early, but nevertheless, this is the Germantown Central School District Board of Education Subcommittee for the annual audit. And tonight we have Mike Rossi here from West & Company, our auditors, and the board members all have the draft of the audited financial statements and supplemental schedules dated June 30th, 2020. So Dina, did you want to add anything or should Mike just go for it?
No, Mike can go ahead with his presentation.
Okay, thank you.
Okay, thank you. Good evening. I'm just going to take what Sue said one step further. We are the audit committee, and under the 5-point plan of New York State, it is our job as the audit committee to meet with the auditor and make a recommendation to the Board of Education for acceptance. So with that, I will give you an overview of the financial statements, some detail, but if at any time anybody has a question, just interrupt me and I will go back and answer anything you want. So the financial statements are in the same format as last year. They are a draft at this time because obviously we have not made it the recommendation to the board for acceptance of the financial statements. They start on page 1 and 2. That is our opinion on the financial statements. And at the bottom of page 1, we say, in our opinion, the financial statements referred to above present fairly. That is an unmodified opinion. That is the highest opinion we have as a profession. After the opinion, we go into something called management discussion and analysis. Management discussion and analysis on page 3 through 11 is required to be in the financial statements. GASB, the Governmental Accounting Standards Board, sets the standards, and they have said that all governments need to have an MD&A accompanying full accrual financial statements. So that's kind of interesting because as a school district, we are not permitted to do full accrual accounting. We use the modified accrual basis of accounting. So if you were to look through pages 3 through 11, you would see a lot of numbers that might not make sense as board members. And if you go to page 12, I will point out a lot of the differences. And I know that sometimes when you look at it on screen, it might not be page 12 that I'm looking at, but I'm looking at the page 12 that is marked page 12, and it's a statement of net position. So with that, if we just go to all the way to the bottom of that page, we have a deficit financial net position of negative $35.8 million. That's full accrual accounting. And obviously, there is no way that any district in New York State or any BOCES could even turn on the lights if we were looking at a $35 million deficit net position. So what is going on here? In the very middle of the page, under liabilities, it says other post-employment benefits payable, and it says a number of $56,361,204. That is a liability that GASB says that we have to place on our books. It's GASB 75, and each year we have to pay an actuary to study the future cost of health insurance for our district. And they've come up with this liability of $56 million, and we've placed it on our full accrual accounting books. But again, New York State does not permit us to fund this reserve, and New York State does not permit us to operate on the full accrual. We are what you call pay as you go, and that is the modified accrual basis of accounting. And what that means is each year, when we build our budget that we go out to the taxpayers for, we put a line item in for health insurance for all of the retirees and the current employees receiving health insurance, and we pay it each year. We pay the bill, pay as you go. So all school districts, and we audit 25 school districts, we audit 5 BOCES, they all have deficit net positions because there is no way to overcome this liability that is piling up on school districts. But also on this page, if you go up towards the top of the page where it says assets, and you go down almost to the bottom, it says net pension asset proportionate share, and it says $858,199. So also GASB has come out with GASB 68, and GASB 68 makes us study our pensions. And we have two pensions. We have TRS and ERS. So our TRS pension was found to be overfunded by $858,000. But like the liability, we are not permitted to do anything with this asset other than place it on this page. We're not allowed to ask New York State to take it towards our TRS payment, nor are we allowed to ask New York State TRS to lower our rate. We currently pay about 9% per dollar that we pay out for certificated employees. So you can see there's things going on here that really, they don't conform to what we do on a day-to-day, operation. Also in here, we have capital assets, and these capital assets are being depreciated and net of debt. If you look under where it says net position and it says net investment in capital assets. So we have buildings, we have equipment, we've been depreciating that on the full accrual. We have debt against it, and our net in all of that is 6.4 million. But in my 25 years of auditing school districts, I've never seen a school district go out and remortgage their buildings. So again, from a full accrual basis of accounting, we've placed it on there. We've, done everything we have to do to satisfy GASB, to have financial statements that meet GASB standards. So the MD&A, the full accrual statements are required, but again, it's not how we operate. And $35 million net position, you're going to see a big difference in a minute when we look at the general fund of the district. So if you turn to page 14, does anybody have any questions on that full accrual? Okay, because it is required to be in the financial statements. We don't have a choice to put it in there. So if you go to page 14, I consider probably the most important page in the financial statement. This is the balance sheet. This is where we wound up on June 30, 2020, and this is modified accrual. If we went into Dina's office, we could print out reports from the computer that would match these numbers. The full accrual is not in our computer system. It's something we have to convert the numbers to get to. But the first column is the general fund. The general fund accounts for almost all of the activity that happens in the district. And if you look at the total assets, 7.4 million, total liabilities, 1.3 million. So the difference is 6 million. And the 6 million is our fund balance. Now, fund balance, GASB 54 says there can be only 5 categories of fund balance. New York State says that one of the categories, committed, is not used in school districts. So we have 4 of them. The first one is non-spendable. We don't have any non-spendable in the general fund, but we do have $9,300 in the school lunch fund. So that's the amount that inventory was left in the lunch fund. It has no, you can't use it as money. It's already in the form of something else. So it's non-spendable. It's in the form of, canned goods, things that we would use in the school lunch program. The second category is restricted. And what is listed under restricted are the reserves that are allowed under general educational law or general municipal law. And school districts don't have a lot of options here. We are utilizing most of the reserves that are allowed for a New York State school district. And you can see that we have a workers' comp reserve. That's pretty straightforward. That is used for workers' comp items. The reserve for debt service is in its own fund. I will talk about that in a couple minutes. Then you see we have a capital reserve. And the capital reserve, 1.46 million. That reserve is very restrictive. It takes voter approval to move that to the capital fund to use it. But in a district like Germantown, which relies a lot on property taxes, it's a very important reserve because that reserve can offset the local share when we do a capital project and we bond it, because the state will not reimburse us like some of the poorer school districts in New York State where they might get almost 100% reimbursement for doing a capital project. So that can offset the local share and not cause an increase in taxes. And we have a repair reserve.
Oh, I just got to interrupt you for a second. Sue, Annie's in the waiting room.
Oh, shoot, sorry.
It's okay. Sorry, go ahead.
By the
Put her in the waiting room. So then we have a repair reserve. And the repair reserve is also kind of restrictive. It takes a voter, you have to have a public hearing, not a voter, a public hearing to use it. And if you don't have the public hearing before using it, you have to replace it equally over the next 2 years. Now, it is not for a repair such as the window broke or an ordinary repair that might happen. It is for a boiler or something that comes up unexpectedly. Then we have a retirement contribution reserve for ERS, and that can be used to offset fluctuations in the ERS report. We're on page 14, Andrea. So ERS has rates, different tiers, and the rates fluctuate. So you have an ERS reserve. The newest reserve is this Retirement Contribution Reserve Fund, TRS. So that can be used to offset the TRS fluctuations in rates. And just so you know, the ERS rate has been as low as 0.62% and as high as 26%. And currently it's at about 9%. So that rate can fluctuate, and that's a way to offset it. That reserve was new last year. It can only be funded 2% per year up to a total of 10% of your TRS salaries. Then we have a tax certiorari reserve. We only have 20,000 in there. That's to offset if somebody sues the district and wants a reduction in their property taxes. After that, employee benefit accrued liability reserve. That reserve can only be used for sick or vacation time when somebody leaves the district. And then we have an unemployment insurance reserve. It's a very important reserve in any school district because although New York State does pay the unemployment claim, we quarterly have to reimburse New York State for anybody that we lay off. That gets us to the third category on here, assigned fund balance. Assigned fund balance in the school district, 939,000, is two different things in schools. It is the amount of purchase orders that were left over at the end of the year. Those purchase orders went unfulfilled and they automatically increase next year's budget. So that was about 144,000. The second thing in assigned fund balance, about 794,000, is the amount of money that we are giving back to the taxpayers to balance the budget. So the voters, we'll say May, I know it changed this year, but usually in May, they approve a budget, and that's the expenditure budget for the year. And the revenue is projected. And in this case, we've projected our revenue to be about $794,000 less than the expenditure budget. So if that happened, we've placed this in assigned fund balance, so we balance our budget. Then the last number on the general fund is unassigned, fourth category here, 987,000. Now this number should not exceed 4% of next year's budget, but it currently does exceed 4% of next year's budget by a slight margin. It is at 6.3%. And later on, I'll show you a page that calculates that. Now, I know we're being recorded. I know that I have a management letter item that just says that we've exceeded real property law 1318. But really, in these times, it is prudent to be over the 4%, even though it is a law. You don't know what's going to happen with state funding. We don't know what's going to happen with costs due to COVID. So being over 4% for June 30, 2020 is not as big of a deal as it would be if this was just a normal time. But again, next year, when we write the corrective action plan, we'll just probably place any monies over the 4% in reserves. That's what most school districts do, but here it's prudent to be. So that's the general fund. That accounts for almost all of the activity. Next fund, special aid fund. It has no fund balance. You see a zero at the bottom. What goes on in the special aid fund is the district is given various grants. Section 611, 619, these are special education grants, Title I type grants. And we need to spend the money prior to receiving the revenue from the federal or state government. So we spent the money, the revenue equals the expenditure, and thus there is no fund balance. Third category, school lunch. You can see we talked about the $9,000 in inventory. There's also assigned fund balance of $5,400. That is just left over from prior years of operation of the lunch fund and can be used for anything that the lunch fund needs. And again, the lunch fund did lose money this year. We'll talk about that in another page. And we have this debt service fund, and there's $73,000 in it. That can only be used for the repayment of bonded debt or its associated interest. So if there was an issue where we needed some money in the general fund, we could take the $73,000 out, put it in the general fund, because every single year we have debt payments for interest and principal. Then this school district uses a CM fund for special revenue. The CM fund is basically people donate money or things of that nature to the school district. We hold it in the CM fund for the purpose of what the donation was for. Then we have the capital fund. And the capital fund has a deficit of $6,477,069 in fund balance. And that is very typical for a capital fund to have that. A capital fund only exists when a capital project is going on. And we have a few things going on right now. We have our $11 million project. We have some Smart School Bond Act monies, those type of things. But if you look in the middle of the page on page 14, you can see that it says bands payable $10,635,000. Those are temporary sources of revenue in modified accrual accounting. And thus, when we actually issue the bonds, the serial bonds that will pay off this project, the deficit will go away. And also what you have to remember is this is June 30, 2020. And you can look up towards the capital fund and you see there's $4.5 million in cash. Over July and August, I am sure that we spent a lot more of this money and the deficit grew. And then when it gets bonded, we will have a zero in here. And when the project's done, the whole capital fund will go away as a whole. So overall fund balance is negative $330,000 for all the funds, but really it's because we're doing a capital project. Okay. Back to two different things here on this page. When the COVID crisis came out, the bond anticipation note, prior to COVID, they could be used for 5 consecutive years. You could use a band. Now it's 7.
Give me 2 more of these.
And also, if you look at the fund balance where I was talking in the general fund, you can utilize any of those fund balances for COVID related expenses, but you have to replace it over the next 5 years plus interest, at least 20% per year. So those are new nuances in governmental accounting, something the governor's office came out with, but I don't see you needing to do either of those. And why wouldn't you bond a project with the interest rates being so low? Why would you continue to ban it when interest rates will go up probably in the future? This report also has a lot of pages of notes to the financial statements. All of those fund balance items I mentioned in the general fund are on page 32 through 35 of the footnotes in detail, how you can use them, how they're established, and by what law. So I just want to point that out. If we go to page 16, 16 is the opposite of 14. 14 was a balance sheet. That is where we wound up on June 30. And page 16 is what we would call an income statement. And this is the same setup: a general fund, special aid fund, school lunch fund, debt service fund, miscellaneous, and capital. And if you look all the way down towards the bottom of the general fund, it says excess of revenues and other sources over expenditures and uses. So we added $390,000 to our fund balance this year. So that's not a lot of money. It's a pretty tight, expenditure to revenue. So we did utilize some of our assigned fund balance, but did add $390,000. The special aid fund, you can see nothing again. And we did write off some old things that were in your financial statement from before. But again, there is no fund balance because the revenues equal the expenditures. The school lunch fund lost about $17,000, but that included $10,000 from the general fund. So that's something that we're going to have to look at, because we still do have that $5,000 in unassigned or assigned fund balance. But as time goes on, if the school lunch fund continues to erode, the general fund is going to have to support it more and more, and it will take up from program. Debt service fund, again, the $73,000, the miscellaneous special revenue fund, $108, and the big loss for the year is the capital fund. But that is, again, because we took a bond anticipation note and we were spending it down. The expenditures are expenditures, but the bond anticipation note is not revenue. So that's why we lost $6.7 million in the capital fund. So those are the funds. That is modified accrual. That is how we're required to operate under New York state law. And then we get to the footnotes to the financial statements. And the nice thing about June 30, 2020 was there was going to be a new GASB called GASB 84. And it was going to say what we could have in a trust and agency fund. And it was going to talk more about the extra classroom activity funds. They have suspended GASB 84 until June 30, 2021. And probably April time period, we will be circling back with all of the business officials in the school districts to make sure that the GASB 84 is complied with. So it's possible that if there's payroll liabilities at the year end that are currently in trust and agency, they may have to be moved into the general fund at the year end. So we will be working on that with the districts, in all of our districts. So we have the footnotes. They're unchanged from the prior year. They include all of the items that we discussed in the restricted reserves. They also include, fund balance stuff, budget stuff, all of the capital assets, any debt that the district has, due to, due froms. They include the TRS, the ERS, and then they include one thing that is pretty interesting to me from an auditing standpoint, and that's on page 43 if you want to go there. So when GASB 75 came about and they said you had to study your post-employment health insurance, you have your contracts, you have your retirees. The only thing that I like that actually came out of that, because it's a big number, 56 million, and it kind of skews the reader because it's up front in the financial statement. But in the middle of the page, on page 43, you see this employees covered by benefit terms. And this is reported in the GASB 75 report. And if you look, there's 181 active contracts for health insurance, let's say, but 86 of them are retirees and 95 of them are active employees. So, when you're looking at this and I tell you your pay as you go, as the inactive employees or the retirees pass the active employees, it just keeps increasing that amount that you have to put on the health insurance line of your general fund budget. And that also takes away from program because we're capped at 2% for property taxes. And state aid is not going to go up. If it even, stays flat for the year, we'd be happy. They're talking about a 20% cut. So you look at that, and that's something that the district is going to have to deal with in the future. Where are we going to get the money to pay for all these health insurance benefits? But, that's required as a disclosure, and it's in there. And I like to point that out. After that, if you were to go to page 47, this is what we call required supplementary information. Required supplementary information means that GASB, the Governmental Accounting Standards Board, requires it. And here, if you look all the way over to the right, you see a deficit of $204,000, but on $15 million, that's really good. So districts really need to be able to budget their revenues in order to know how much they can expend, because sometimes districts go out with a big expenditure budget, they've over projected their revenues, and they spend all the money, the revenue doesn't come in, and it causes a big shortfall, and that's where districts get in trouble. It eats up all of that 4%. But here we can accurately predict our revenues, which goes a long way to our expenditure side. Now, if you go to page 48, 48 is our expenditures. The first column, the original budget, is what the voters approved. The second column, the final budget, that includes increases from purchase orders that were encumbered last year that carried over, plus any reserves that we appropriated. And then the third column, actual expenditures, that's what we spent. And you can see that we underspent the budget by about $1.4 million. And this happened in a lot of our school districts this year. Once there was a closing of the school district, we didn't pay any more substitutes. Transportation was saved on once the schools closed. So there's a lot of items that helped out this year to help our expenditure budget not be spent in total. And the revenues exceeded this amount by the $390,000 that we added to our fund balance. After that, page 52 is very important. So 52 is supplementary information. It's different from required supplementary information. This means a government less than GASB has required it to be in the financial statements, and here it's New York State. And if you look at the bottom of the page, real property law 1318 is calculated. Next year's voter approved budget times 4% would be 631,000. And as I told you, we have about 939,000. So that's 6.3%, 2.3% over the 4% allowed. But again, we're very okay with that, especially in these times. Then if you want to go to page 55, page 55 is the independent auditor's report on internal controls over financial reporting. So because this is a yellow book audit, a government audit, we have to discuss internal controls. Do we have to come in and the books are a mess? Do we have to make a lot of journal entries? Do we have any issues? And here, this is an unmodified opinion. Dina did a really good job. She picked this right up, got it all in order, got it to us. No material journal entries, no major issues were found. So the reporting at the school district level was excellent. So this is also an unmodified opinion. And Dina, did you come in the middle and not right at the beginning of the year, right?
No, I started in March, mid-March.
Yeah, so Dina really had to pick up the books from Jesse. I don't know if you call him Jesse. I get confused. We knew him over at Chatham. So, you know, Dina had to pick up somebody else's books and did a great job getting it all together for us. And I know that, you know, school was closed, people were in and out. We had our own difficulties this year because we were trying not to go to the schools. We're trying to do more things remotely, but an excellent job of getting it all together. Then on page 58 and 59, the third opinion in your financial statement, we have to give an opinion on the extra classroom activity funds because the Board of Education has oversight over these funds, so they're required to be in the audit. And here we do have a qualified opinion. So the first two opinions were unmodified. That's the highest opinion. And then a qualified opinion is below that. And you give the reason for the qualified opinion. So the reason for the qualified opinion is there is no way to audit the actual event that happened. We only audit from when the money goes in the bank and from when the check is written. From that standpoint, we don't have any issues. So all we're saying is there is no way to audit every event. We don't know if the students had 50 people come to the dance, 75 people come to the dance. We don't know if they washed 10 cars, 12 cars, had some lunch, only deposited half the money. So we go from when the deposit was made. And this opinion is in all 31 of our audits that we do for governmental governments. And that is the extra classroom activity fund. Then on page 61, we list out all of the clubs. And there's a couple things going on here in the clubs that I need to just discuss. The cheerleading club, the health club, the garden club, all of those clubs have zeros in the receipts and zeros in the disbursements. So we consider them fiscally inactive. And we just asked the board to look at those to see if they're going to remain fiscally inactive. And it's possible that the students meet, but they don't fundraise or they don't spend any money. But we don't want to see the school district pay an advisor to oversee one of these clubs if there is no activity going on. And generally, if a club has no activity for a few years, the board normally will close that club out and transfer the money to a club that benefits the majority of the students, such as the Honor Society or a student council, something like that. So that's just something for the board to look at. And then lastly, in the financial statement on page 63, we have a very brief management letter item. And this is the, you know, we have to unfortunately write this, that you were in excess of the 4% of real property law 1318. Within 90 days of submission of this audit, you'll have to do a corrective action plan, but all the corrective action plan has to say is that as 2021, you know, finishes off, the board is going to give authority to transfer money into reserves if there are excess revenues over expenditures this year. It's very possible that it might correct itself because we may have to spend more money this year than we take in because there could be an aid cut. There could be additional expenditures due to COVID. But I mean, overall, for somebody to walk into the district in March, probably the worst time of the year to come to the district. Any district going with what was going on in the world. Great job. The audit is done. If the audit committee makes a recommendation to the board for acceptance, this will come out of draft tomorrow. It'll be signed by Weston Company. It will be electronically transmitted to Dina, and Dina will upload it to SED and OSC, and that completes the audit process for June 30, 2020. Any questions that anybody would like to ask?
So if it's okay with the board, I'd like to throw something out there, Mike, if that's okay.
Yeah.
So regarding exceeding the 4%, as you know, for the last several years, we have never exceeded the 4%. And that is because of the reserves plan and because we were putting the money in at the end of the year every year. This year, the guidance that we received, and Dina and I 100% agreed with this, due to the COVID pandemic, we wanted that money to be available. Mike just said it may resolve itself. We have spent a ton of money this year on COVID related items. We're going to attempt to get FEMA to pay us back for some of them, but there's no promise there. And if we are fortunate enough to remain open, just purchasing the ongoing PPE so that we always have the amount that we need, we knew would be a high cost. And that is why we made the decision not to recommend to the board to place the excess money, I think it was around 300,000, into a reserve, even though the law was being relaxed on use of that money. Once it was in the reserve, then the board would have to pay it back if we needed to take it for COVID expenditures. So Mike, I'd love your comment on that, but that was the rationale that we had at the end of the year.
No, that rationale is perfect, because in almost all of our school districts, we've had the same situation. Most of our school districts are exceeding the 4%. And a lot of that too had to go with, there was talk of the school district not receiving its September aid payment, receiving it, but less 20%, including BOCES aid. So that is still ongoing. There could be some reduction of state aid that happens at any time between now and June 30. So really, you got to leave that money free at this time. It's just prudent to do it. You need the money. It's got to be there. We have no idea what's going to happen. You know, they keep talking. There's 83,000 cases today. The cases are going around. They're increasing all over the world. Who knows when the vaccine will actually be ready? And you know, it causes havoc just if one person has it. We had a school district that had to shut down for a couple of days because 14 teachers were required to be quarantined and they couldn't get substitutes. So that threw the teacher. And then we had another district that had a bus driver get it, and they had to go to remote for 2 days because of it. So you just don't know. So it's okay to be over the 4% at this time. And again, you're not grossly over the 4%. So that it's very prudent.
Going back to the extracurriculars.
Yes.
As I'm looking at this on page 61, like the class of 2018, the class of 2020, you said the health club, right? The garden club that were inactive.
Cheerleading.
What do we do with this money?
Well, the question is are they in? Well, the class of 18.
They're definitely inactive.
They're inactive. Anytime a class leaves, the money is supposed to go with them or is utilized. Now, obviously the class of 18 left that money there. That can go to anywhere the board wants. Any club can be closed for any reason. Now, the class of 2020, they might have had something going on. They may have something. You might want to contact them, see if that could be put over to the CM fund at this time, or possibly in the trust and agency fund. You know, maybe the student president from that year, they can open a bank account. They can use it for future reunions, anything like that. But honestly, the cheerleading club, you know, it's very possible that when school resumes and there is cheerleading, they might do it. It might have just been that this year, with all that went on, they didn't have it. But we just asked you to look at it. And really, there is supposed to be a board policy that says what's going to happen to the money. And normally the board policy just says it will benefit the majority of the students. So it normally goes to like the student council or the National Honor Society, something like that, when a club is closed.
Okay. All right. Thank you.
You're welcome.
Mike?
Yes.
This is Donald. I learned something new this week, and it's called the gross factor of towns, meaning that the town built like a $5 or $10 million home.
Yep.
And we can use that. Can we use that in the school like they do in the fire company? That gross factor is a 1 point something. So we can go with our 2% tax hike plus the 1.47 this year. Can that be done in the school as a gross factor?
I don't know that can be done. I don't know that that is in the tax cap calculation. I don't believe I've seen that. Dina, do you know?
I don't know, but I can check that information and get back to
We
you,
can
Don.
check that out. So you're saying a home was built for a lot of money? Is that what you're saying?
Yeah, in the town of Gallatin this year, our growth factor in our assessed value
Yeah.
was 1.7%. And when you got 35 to $40 million, 1.7% is a lot of money. And if we can add that in to actually offset a lot of the taxes of the other people, and the way I'm looking at it is the school is losing money because they can only go with like 2% or 1.37 or whatever the state says we can go with.
Whatever the 2% is not a 2% tax cap. It's based on a lot of factors. But I don't know that that house is put in as that. Normally what happens is the assessment is set by the town or, you know, the county. And then that is put onto the tax rolls. And then the school district collects whatever the taxes are on that at the tax rate for the district. So I'm not sure that you can just add it to the tax to the 2%. You are going to collect that money as real property taxes based on the assessment.
Okay, now, because I know with the fire company, now that I became a fire board of director, that we had a lot of problems with that, with the fire companies wanting that 1.47% more in a raise this year. And according to the state of New York, we had to give it to them.
Okay, well, Dina and I will look into that.
Okay.
But generally what happens is your tax levy is set. You're going to collect an amount, okay? And what happens is as you add assessed value to a tax levy, everybody's taxes kind of go down because you're only collecting a certain amount of money. You see what I'm saying?
Yeah.
So we'll look into that and we'll get you a definite answer. But I don't think that you can just add that 1.47 to whatever that 2% number happens to be, and that's the amount the levy can go up.
Well, that was my way of thinking, but I was proved wrong the other night, last night when I was at a meeting.
Well, it's very possible. There's a lot of calculations that can go into it, but we'll look into that and we'll get back to you.
Okay, thank you.
Because we don't really control our taxes. Our tax assessments come from, the county or the village or the town, and then we send out the tax bills. We're not out there doing assessments.
Right.
Okay.
Mike, so you guys took note of the internal controls, but you didn't actually audit them. Is that correct?
We have to do some assessments of the internal controls, and we do test a lot of the internal controls, but not all of the internal controls. Correct. We test payroll controls. We test disbursement controls. We test those type of things.
Okay, so you do test the majority of them then?
Yeah, we test a lot of controls. We did control testing, a lot of it actually, but yeah, we don't test all the controls. We only need to report on it. And let's say that we saw where people were getting overpaid all the time or something like that. That would be a breakdown in controls. That would probably mean that the expenditures weren't correct. And then when we do substantive testing, which is we actually go back to 941s or we go back to contracts, something of that nature, we would see that there was an issue and we'd have to have a deficiency and we'd have to have a significant deficiency in that opinion.
Sue, do we ever do an internal controls audit? Is it ever done?
Well, oh, sorry, you want to answer, Sue? But I can tell you something.
Well, I was just going to say that every year, for instance, every single year, Mike's team requests a different set of records. It'll be some random. I mean, Dina can definitely give you more info, as can Mike. So that has always turned up any place that we had a problem, because a few years ago, you may recall that we determined that there were really not enough eyes on or enough help to make sure that payroll was accurate, and the board made the decision to partner with the BOE, so we have that payroll service and a part-time payroll clerk here, and that addressed that issue. That was an issue actually, I think, before Mike was on board. But I do think it's fair to say, Mike, that every year you do random testing of pretty much everything, right?
Well, we do a lot of random testing, but I also want to point out that every 5 years, the New York State Comptroller's Office comes in and audits every single piece of paper in the school district. Yeah. So that they're also doing that. Also, you don't have it, but part of the 5-point plan is if your district has more than 1,500 students, you do have to have an internal control audit. So that was part of the 5-point plan. But yes, we're testing payroll, we're testing disbursements, we're testing items from a control standpoint, as well as doing substantive testing.
Cool, thank you.
You're welcome. Any other questions? So if there's no other questions, like I said, to wrap this up, the audit committee would give a recommendation to the board for acceptance. Upon that acceptance, Dina will tell us, we'll put this out of draft, and tomorrow it could be in the portal for New York State and OSC. You have until, you ready for this one? December 1 to submit it. If you get to December 1 and you don't submit it, they will hold your state aid until the submission of the document. So I would not go past that date.
Well, we certainly won't do that.
Okay.
So if the board if the subcommittee, the audit subcommittee to the Board of Education would like to pass this as an item on the agenda this evening, it is pre-printed there, but certainly if you're not prepared to do that and recommend it to the board, it can be removed. But we did place it on there with the assumption that the board would be okay with recommending it to the full Board of Ed in 12 minutes when they meet to consider it as approved or accepted, I think is the correct term.
Accepted, yes, correct. And if at any time anybody has any questions or wants to discuss the report, you can get a hold of me through Dina. I'm more than happy to jump on the phone, discuss any pages with any board members that they want to discuss. And Donna, we'll find out your answer and let you know about the adding to the tax 2%, whatever that number is.
Okay, thank you.
All right, thank you.
Thank you, Mike.
All right, thank you and good night. Have
Thanks,
a nice night.
Mike.
All right, thank you.
Thank you.
Bye.
All right, I'm going to end this subcommittee to the Board of Education Audit Committee, and I'll see you in a few minutes at the 6:30 meeting. It is a different Zoom invitation. So see you in a few.
It took me a half hour to find this one. Well, now what am I going to do?
It's in the same place, Tom.
The same place.
Go to the same place. Just click the bottom one.
Okay, thank you.
Thank
You're
you.
welcome.